Joining us now is Bob Parker, a senior advisor at Credit Suisse. Hi, Bob. At least they've got an extension to the share swap for another month. They've got a bit more time to try and hammer this deal out. Do you have hopes or not?
I think it's going to be very difficult. If you look at BP's partner in Russia, AAR, they have said that they want to keep their investment in BP-TNK. They don't want to sell. On the other hand, there's a price for everything. There has been a tentative value put on BP-TNK of about 70 billion. That would mean that their 50% share, 35 billion. It is debatable whether BP could actually buy out the counterparty at that sort of price. So consequently, I think the stumbling block is, can BP come to a satisfactory solution with its Russian partners? And at the moment, that's not looking likely.
Well, it's got 30 days to achieve that. In the meantime, Bob, we have an AGM today. The first AGM, of course, since the Gulf of Mexico oil disaster last year. You're a shareholder. If you are, what do you want answered today? What are the key issues?
Well, I think there are a number of problems. The first problem is that the PIRC, P-I-R-C, the pension group, have actually put out a recommendation that institutional investors vote against the compensation package for senior management that has to be voted on at the AGM. The Association of British Insurers have issued what they call an amber top. Now, in English, that means that's a warning that they don't like the compensation package. I think the other issue is
it'll go through, though, won't it? They usually do.
I assume it will go through, but with quite a strong investor protest.
Yeah.
I think actually the more fundamental issue is what happens if the Rosneft deal does not go through. Now, you've quantified there the cost of the deal unwinding of 1.6 billion. Obviously, that may change upwards or downwards by the May deadline, but that means that if it doesn't go through, BP then has to mend this very fractious relationship with AAR. It then has to actually clearly say what its new strategy is going to be, because the current strategy relies a lot on Russian exploration in the Arctic.
Because it replaces a lot of the reserves it's had to sell to pay for the Gulf of Mexico disaster. So
Absolutely.
It's a key part of the strategy, isn't it? I mean, where would they go if the Russian strategy fell apart?
Well, clearly it's going to be difficult. No, they are actually moving back into the Gulf of Mexico. They have very good fields in Alaska, albeit now somewhat old fields. They've got a very good position in the Caspian. Obviously, the Libyan investment, the planned Libyan investment, that clearly is on hold for, I would argue, a period of time. And they haven't got the big position that Shell has in Western Africa, and also where Exxon has a huge investment as well.
Bob, let's talk bigger picture. Let's talk investment strategy. Let's talk where we put our money. How are you feeling about these markets right now?
Well, clearly equity markets have got a lot of headwinds at the moment. You know, whether it is the ongoing risk in Japan, whether it is the high price of oil, whether it is, I think more importantly, some downward revision in corporate earnings outlook. But having said that, if you look at global equity markets, the alternatives, such as bonds, such as money markets, are actually very unattractive. Commodity prices are very elevated. So I think almost by default, those negative factors actually don't drive equity markets down. I think we're in for a period of sideways trading for the next 2 to 3 months. What worries us is later in the year, once the European Central Bank is more into its tightening cycle and the market is discounting ECB rates of 2% by early next year. Also, once the market starts to worry about monetary and fiscal tightening in America, then I actually think you could have a correction later in the year.
And what do you do then? What's the best
then obviously
safeguarding?
one has to look at the alternatives. And if I'm right that by the third quarter of this year the bond yields could be significantly higher, then obviously some move out of equity markets back into bonds might be the appropriate move. I would argue that is far too premature today. One has to stay with high dividend, large cap positions, and I think actually the outperformance that we've seen in emerging equity markets in the last month will continue. So run that emerging equity position.